This is Richard Flax at MoneyFarm, talking about some of the things that have caught our attention over the past week or so. It's really been a bit of a tug of war between macro data on the one hand, which has come in broadly better than expected, and the healthcare figures where the significant increase in infections in the US has prompted some states to begin to roll back some of their reopening measures. On the macro side, as the chart shows, we've been seen better than expected figures from the manufacturing sector and some stronger employment numbers. The question here is really whether that's already been overtaken by the healthcare statistics, and the higher infection rates in the US translates in the coming weeks and months to weaker economic data. In Europe, the healthcare picture remains a little bit better. And it's interesting that we've seen European equities do a bit better than US equities over the past couple of weeks. Still a very short time frame, but perhaps given some slightly cheaper valuations and a marginally better healthcare picture, maybe European equities are in a position to outperform. We continue to see relatively positive noises on the vaccine front, although it's difficult to estimate really the impact that will have in terms of when we have a range of viable vaccines to treat COVID-19. Going forward, employment is likely to become an increasing focus of attention. Obviously, governments have instituted a number of very significant policies to help support employment. And the question comes towards the end of the year to what extent they are able to continue those programs, whether they will taper them, let them lapse, and what then happens to the employment picture. Even if we see some improving macro data, it's still coming from a relatively low base. The environment remains very uncertain. And we'd guess that in a number of cases, governments will look to perhaps extend some of these programs beyond the initial end date. So we've seen some positive figures. The healthcare situation, particularly in the US, is a cause for concern. And the policy support that we see, both on the monetary and the fiscal side, will remain very significant to help drive an economic recovery and continue to support financial markets. Thank you very much for your time, and look forward to speaking to you again soon.